All right, ladies and gentlemen, hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen, the 14th, yes, 2025, July. Yes, all those things. Look, today's, like I said, Monday. We have a busy week, in my opinion. We have an interesting week. We have a few economic developments happening, economic indicators coming out, very important. So I'll pick up on all that. Look, also, just before we jump into the action, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yeah, so like I said, today not today. In general, this week we also have the ongoing situation with the tariffs. I think that this is going to be the still the topic, if not number one, but next to the number one, basically. Number two, no, I think there's going to be two topics. Number one, economic indicators and of course the tariffs. Look, also just before we jump into the chart, just a very quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, markets. Okay, look, of course I have the chart Nikkei here, and I'll pick up on that one. But on that one, let me go first through what's happening in general in the world. The economic calendar, first of all, right, this week, we did already this morning get the trade balance from China, which showed a nice improvement here. So, in a way, good for China. I'll pick up on the China 50 index in a bit. In general, today we also got the industrial production final numbers from Japan. So those are not really the best ones, I would say. We'll keep that in mind. But going further, today in general, that's kind of it. I think that the main agenda will be the tariffs, that we're seeing US imposing tariffs on EU and Mexico, slashing those, not slashing, but like throwing out those 30% tariffs on the two regions. Okay, look, I talked about this last week, and in terms of tariffs, I would say you have to be I think that these are more of like threat tariffs. They're not. I don't really think that they're gonna impose like 30% tariffs or anything like that. No, it's just basically somebody wants somebody to come over, to the office and have a nice discussion. Hey, like, what can we do? Like, and blah blah blah. Just like have a nice little deal. And or maybe the other idea is just to kind of have that flat 10, maybe 15% tariff on all goods coming into the US, and kind of that's it. So because the 15% looks better than 30%, right? So it's I think it was the plan all along to have that little add-on added on all imports coming into the country. So I think that that's the case. So you threaten first to impose like big, massive like numbers there, but then actually, okay, I'm gonna go down to 10, 15. Okay, are we we're working right? We're working there. So there we go. So like at the moment, I think that that's the case. Well, again, I might be wrong. Of course, I mean, this is an ongoing thing. It keeps on developing. Like something that I was thinking about maybe like half a year ago. It's now like totally different because again, certain things that that are happening the way they're shaping up. Initially, you don't want to believe them, but then you start believing them, and it's all becoming a big mess. With this current administration, it's a little bit tricky in a way. Although we always have material to talk about, right? Look, for now, like I said, I think that the EU and Mexico expressed their dissatisfaction, but they're willing to communicate. And honestly, if you're gonna impose tariffs on like 30% tariffs on Mexico, I mean that's where you get all of the like a lot of your goods. I mean, if just to kind of let you know that Mexico is the number one trade partner. This is where where in the U.S. imports the most of the stuff from. So if you're gonna import, you're gonna hit your consumer first. If somebody's thinking that they will improve, or let's say this way they will try to kind of force more businesses to establish production in the U.S. itself. I mean, how are you going to do that with the agricultural thing? I mean, it's not possible. It's just really, really not possible. You're going to hurt your consumer at the end. You're yes, you're gonna some of the tariffs will be absorbed by the companies or or in general by the countries, by the country, by the exporting country. And the companies within it, but in general, you're going to be hurting your own consumer. So if we know that, let's say, one of the most popular imports by the U.S. from Mexico is our avocados, I mean, look, if those are going to go 30% more, you're actually looking at the whole kind of hospitality sector getting those tariffs and increasing those. So you're going to be harming your hospitality first. And again, because we know that there's a huge consumption of avocados and other products from Mexico in the U.S., right? So yeah, how to say that that inflation is not going to come first before the establishment of production within the country? I don't know how you can say that. I really don't. But anyway, they know better. For now, we can just basically go with from what we have. We can look at the markets. I'm not saying that this is like the end or something, that this is like a big tragedy. It is a tragedy in a way, but businesses will adapt. Businesses will adjust. The only thing is that I think when you're this way, you're trying to make the population poorer, and of course, the poorer the population, the more submissive it is. So that's why these are the measures that governments normally take against people. We just need to, we as the people, we need to understand that this is what's happening, and this is what this is how we need to we need to understand this information. We need to adjust to that. We need to find other maybe sources of income or something like that. But it's just like, yeah, it is how it's never fair. It's never fair to us. Anyway, let's see how this show continues, because at the moment it's more of like a telenovela, or the tariff telenovela. And let's see where we're gonna get at the end. I don't really see the light at the end of the tunnel yet. I mean, we're still going through this. I think that there's still going to be negotiations and throwing out accusations at each other. But the thing is, do I believe that all these big numbers are going to get imposed? I really don't, honestly. Like the 1st of August, we're coming up to 1st of August. I think the can will be kicked further and further, and I think that the market understands that as well. So that's why we're not really seeing major sell-offs or anything like that, because we're just seeing, yes, a little bit of maybe correction here or there, but in general, the stock market is not really correcting sharply to the downside, because the market does understand that probably the can will get kicked again further from 1st of August. Now we're going to go into, I'll give another month, 1st of September, blah, 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 boom, right? Again, just based on what has happened before. If you couldn't agree anything during 90 days, another month, okay, another month. So yeah, that's what I'm saying. So that's why we're being very, very careful. Coming back to the economic calendar, Tuesday is going to be an interesting day, ladies and gentlemen. Let's have a look at that one. First of all, Westpac Consumer Confidence Index coming out from Australia, so keep your eyes on down. And then China is going to drop a bomb on us, in terms of economic data. House prices, fixed asset investments, GDP growth rate, Q-on-Q and year-on-year, industrial capacity yields, industrial production. There, probably this one's more interesting. Retail sales, unemployment rates, boom, explosion. So if you're watching the, or if you're trading something China related, keep your eyes on tomorrow's data, or actually depending on where you are, the time zone. Maybe you're in Asia, maybe you're, it's actually going to be, but yeah, it's tomorrow still. What am I talking about? Anyway, look, ladies and gentlemen, so keep your eyes on that. Of course, Chinese data is going to be very important, but then after that, we're going to get the US and Canadian CPI figures, and that's going to be interesting, and that's going to be a market mover. If you're going to be trading something US related, most likely you will, then yeah, keep your eyes on that, because look, let's have a look at what's happening here. Inflation rate year on year, we are expecting a little bit of an uptick. So in a way, it's really going to be interesting if it's going to come out at 2.6. Let me just jump into this one. If it's going to come out at 2.6. So this is the previous one. Oh, what's Tommy doing here? The previous one was 2.4. Look, now the expectation is for a 2.6. Is it logical? Yes, it is, because I think businesses have been slowly adjusting to the new norms, to the new tariffs. So I think that everybody started maybe like, increasing their prices just maybe a little bit, just to kind of try to protect themselves from kind of future major shocks. And we do understand, like I said, that anything can happen, and I think that the businesses are trying to, protect themselves as well. Also, some supply chains have been disrupted a little bit, but yeah, look, in general, I keep on saying that the global demand is slowing down a little bit. So you would say, then why, if global demand is slowing down, why there is like an increase in price? Well, it's not that rapid rate, as we're seeing some issues, some fear kicking in. So demand, yes, it's slowing, but then supply still, there is still supply, but the supply is kind of probably dropping a little bit faster than demand. There we go. So there is supply, and people are thinking that, but then wait, the supply is still there. It's a very, like I said, it's a very confusing situation right now, in my opinion. Supply right now, in general, the supply right now is, like I said, is on a bit of a decline. Demand is also falling. We can see that by oil prices, which I'll actually pick up in as well when I'll jump into commodities. So there's fear kicking in, this whole disturbance with tariffs. Some businesses are ramping up a little bit their prices in order to kind of protect themselves like from future shocks. So you get this total disbalance right now, and somebody might say actually that maybe we're in some sort of a bubble. Again, whatever you want to call it, we were probably in different bubbles already in the past couple of years, and people and analysts have been calling them out, those bubbles, and still the stock market continues to rally. So in a way, that's why we go with, when we get some sort of a big problem, then we go with that. It's like when we had the big April drop in the stock market. Look, long story short, for now, if we see inflation coming out, if we see the headline inflation coming out, let's say somewhere at 2.6 or maybe a little bit higher, well, that would be a little bit of a major blow for the current White House administration, because they keep on pressuring the Fed to lower rates. And if inflation comes out on the higher side, well, you should not be lowering rates. On the contrary, you should be either keeping them the same, which most likely what's going to happen in. Let me just refresh this page. This is what's going to happen at the end of this month, because at the moment the forecast is for a 93.3% for a no cut. And then going into September, that's where the potential for a cut could occur. But like I said, if inflation starts picking up, then like I said, it would be a little bit of a blow for the current administration, because like I said, they keep on advocating for a rate cut, because they say that, oh, inflation is at lower levels. But in general, I think that we are at the spot, and let me just jump into that chart again. We are at the spot where inflation has been dropping significantly since like from mid of 2022 to mid 2023, and then since then we kind of stabilized a little bit. We're in decline, but we have stabilized. So if you would ask me to apply technical analysis on this, and I did this already in one of my previous sessions, if you would ask me to apply technical analysis on such a chart, which normally I tell everybody not to do that, because again, this is just, it's very, very subjective. But whenever we have a sharp decline and then a gradual decline after that, we tend to break to the upside. So that's why, like I said, that's why all these tariff talks even are increasing, increasing fears of possible inflation coming first rather than creating production, some sort of production inside the country. So that's why be careful with this. And, it could, like I said, it could play out nicely for the US dollar maybe later on. But like I said, for now, it's, and maybe the stock market could feel the pain later. Not now, at the moment, it's all still okay. Yes, keep your eyes on this number. Canadian inflation. Now, that one, where that number is, the year on year, that one is at the lows. And inflation target, just a second, I forgot what is 2%. Now between midpoint, yes, the 2% midpoint, between 1 and 3%. That's what their target is right now. The Bank of Canada's inflation target is around between 1 and 3%. So basically, let's launch this chart. Let's have a look what's happening here. Yes, switch to M. We also have been seeing low inflation numbers in Canada, and okay, like maybe you're trying to increase tourism in your country, and also it's good for the Canadian consumer who is earning Canadian dollars in a way, but still we need to understand that inflation will pick up. The Canadian interest rate right now sits at, let me just double check myself, 2.75 interest, yes, 2.75%. And look, for them to go lower, I really don't know. I think that they're going to keep it as it is. But I think Bank of Canada did quite well. They managed to drop the rate very quickly, and now, as I keep on mentioning before all the time, that it's better to hike rates from lower levels, right? And maybe that's what the U.S. administration wants to see. Maybe they want to cut rates now because they know that they will have to hike later on when inflation picks up. So and this is how they will spin it politically probably, and that's this is where they're trying to accuse Jerome Powell of not being friendly in that sense. But again, I think that specifically for the U.S. economy, I think that the rates probably are somewhere where they should be. For Canada, it's a little bit of a different story. They need to boost their economy a little bit more. They're heavily oil reliant, and yes, so that's all okay. That's all normal for Canada. So Canadian inflation is currently, the year-on-year headline inflation is sitting at 1.7. So again, looking at this picture, I mean, if it pushes back towards 2% somewhere here, I think it's okay. I think it's all fine as long as it stays within the between the 1 and 3%. But at the moment, it's closer to the lower bound. If it starts shifting towards the upper bound a little bit more, then I think that yes, people will still worry. People will still find some sort of issues with all this. So long story short, for now, we're watching these inflation numbers very carefully. Tomorrow, like I said, keep your eyes on that, and we could expect some volatility, especially in USDCAD as well. Going into Wednesday, it's somewhat of a quiet day. We have the PPIs coming out later on in the day. US PPIs and the US industrial production is coming out, manufacturing production. So a little bit of data here and there, honestly. So we could see some movement in the US dollar. Jumping into Thursday very quickly, Australia employment numbers. So unemployment rate sits at 4.1. In general, Australian economy is still okay. I mean, they're not really messing around too much. They didn't go for a cut last week, so I think they're doing everything what they can, what they believe is correct, and so far, like I said, there are no issues there. But for now, it's interesting how Australia is kind of left out of the whole news headlines and everything in terms of tariffs. Who's getting if they're getting a tariff or not. And it seems like it's mainly focused now Europe, Mexico, and the Australian side seems to be kind of okay. And I don't know, maybe there's something in the background that they have agreed on, but yeah, we will never know. It's the same as with the Chinese. They agreed on something, but nobody knows all the details. Right. So it's all a nice little show. Thursday, European Union CPI final numbers. There we go. Inflation rate year-on-year final 2%. So okay, look. Normally the EU numbers come out kind of close, the same as forecast most of the time. Sometimes they deviate, but the all the time, the way you can play the game with the European data is you look at the forecasts. That's fine, but if you look at that's fine, like I said. But if they deviate a lot, doesn't matter, to the upside, to the downside. Now that's when it becomes interesting. Initial and continuous jobless claims coming out on Thursday. Yep, the usual. Philly Fed figures are business conditions are Fed manufacturing index is coming out as well. Very important to watch. Retail sales, U.S. retail sales, something that the market will be very careful about. And in terms of other stuff, like, okay, we have some Fed speakers. That's going to be probably a little bit of a market mover. And then going into Friday, well, Japan actually starts throwing out its inflation numbers, so that's going to be an interesting one. The previous is sitting at 3.5. Let's see if it's going to come out on the higher side. Let me just launch the chart here to see what's happening with this one. I mean, their inflation is a little bit on the higher side. We understand that. At the moment, we're seeing there are some political shifts in Japan, and basically this might impact future rate decisions. At the moment, we know that the bank wants to continue hiking because in order to control inflation, which is understandable. But I think that there are some concerns that there could be a new government in town which could support kind of either no action or just maybe more cuts. But I really don't know. It's at the moment, like I said, it's a difficult one. Nothing is for sure. But if we do stay with what we have right now, then yes, the BOJ is willing to go for some hikes in the near future in order to control inflation. I'll jump into the Japanese yen in a bit, but just wanted to pick up on this very quickly. And finally, Friday, housing starts, something to keep in mind, and Michigan consumer sentiment, the preliminary figure is coming out, and that one's expected to come out on the higher side. So, ladies and gentlemen, very quickly, let's jump into, because I wanted to pick up on these economic data sets, because again, it's a busy week in my opinion. We have a lot of things happening. Apart from these economic events, we have the tariffs still ongoing, so that's another market mover. And also, not to mention the crypto world, but I'll get to the crypto world is going to be for dessert at the end of this webinar. Very quickly then, Japanese Nikkei 225. So the technical picture, we are looking at here as something still somewhat. I'm still somewhat positive on this one, because I said to you last week that even though we do correct lower, we do correct back down, if we still remain somewhere above the crossroads of these two trend lines, the little short-term upside line taken from the low of the 23rd of May and the downside line taken from the high of the 10th of July of 2024, then there is still a chance for this one to push higher. This to me looks like a nice bullish flag. We have our kind of somewhat of a pole, and we have our little correction back down here, very gradual down move here. So that's why for me at this point, I'm still somewhat positive, but I would prefer to wait for clearance of this territory right there, this whole highlighted zone, which is kind of roughly between the 40,280 and the 40,620 zones. Again, like I said, it's not a specific level. It's more of an area I'm watching this. If we start clearing it, great, I'll get more comfortable with the upside. China 50. Look, I'm still somewhat positive on this one because we cleared the 13,800. We remain above it, so I'm still going to continue pushing to the upside. By the way, ladies and gentlemen, when I'll be talking about other instruments, look, or maybe there is an instrument of an interest to you which you would like me to cover, because I will be covering a big list of instruments, and but like I said, if there is something that you would like me to cover, please drop it in the chat box. Oh my God, I forgot to put good morning, the usual good morning everyone in the chat box. There we go, ladies and gentlemen. So yes, like I said, if there is something that you would like me to cover, honestly, throw it out there. Or maybe you want something to share as well, just throw it out there. Let's have a conversation. But look, China 50, yes, so far so good. As long as we stay above the 13,800, I'm going to continue targeting the upside. Period. If we start falling below it, I'll start shifting my attention a little bit towards lower levels, and then we'll go from there. Let's jump into the US. There we go. Look, the earnings season. We are starting the earnings season this week, and we're starting off with financials. We're getting tomorrow we're getting the JP Morgan, Wells Fargo, BlackRock, Citigroup, Bank of New York Mellon. Yeah, the big dogs, the big financial dogs are delivering their I want to say interest rates, their earnings. So we'll keep an eye on that one. Then Wednesday, Johnson & Johnson, Bank of America, Morgan Stanley, Goldman Sachs. Going into Thursday, Netflix. If you are trading stocks, then yes, of course, keep your eyes on that. We have the GE Aerospace, Abbott Labs, PepsiCo. So keep your eyes on that. And then on Friday we have the American Express, Charles Schwab, 3M. So Schlumberger, if you're also trading that. So yeah, we do have some important companies kicking off the earnings season, and then next week we're going to be having some other big names. So keep your eyes on that. If you think that the only tariffs can move this right now, I think that this is the point where it's not only tariffs. Previous weeks we were having, and I was talking about this, that we didn't have much data, so basically whatever we get in the headlines, that's the market mover, right? So now we also can have not only tariffs. We can also have not only economic data, we can also have the earnings. So basically prepare yourself for a little bit more volatility. By the way, let me just jump into VIX just to see what's happening here, at what level we are. Yeah, okay, so this is what I was looking at recently, and basically if I apply technical analysis on this, we remain still above this upside line taken from the lowest point of July 2024. So let's see what's going to happen here. In general, yep, this is looking quite positive here for the VIX. And yeah, let's see if we're going to maybe explode to the upside here or something like that. Look, Dow Jones Industrial Average. I talked about this I keep on talking about it every time, and probably for the past month or something, I kept on saying that, look, I'm still bullish on this one because I believe that if the S&P did a new all-time high, if the NASDAQ did a new all-time high, Dow needs to kind of play. Dow is playing the catch-up game, and I think that it will, or it. Sorry, I wouldn't say it will. It could potentially reach that current all-time high, which is currently on my chart on the cash index is around the 45,077 zone ish, approximately around there. So this is where I'm targeting. This is what I'm aiming for now. This looks still somewhat bullish because it seems like a bullish flag. We have a nice move to the upside. I think it's on the weekly, ish kind of a bullish flag, I would say. Not the most exciting, but yeah, we're pushing now a little bit lower. Also, we're trading above this upside line right here, taken from the lowest point of April of 2025. So this upside line still is in play. It could still provide good support, but look, one thing that supports my bullish case right now is, let me just grab the parallel channel here, is, oh, okay, I don't like this. Let me just do this, do the old-fashioned way. So this thing, a possible falling channel, a possible falling channel. Now, it's not really confirmed yet, I would say, because we need a rebound from the lower side of this possible falling channel. But if we do get a rebound, then I'm still bullish, because we have this upside line, we have the falling channel. Look, while we remain inside the falling channel, yes, the trend, the short-term trend could remain to the downside. However, given looking at the prevailing trend before entering that falling channel was to the upside, so this one kind of, according to all the TA rules, this points more towards a possible breakout to the upside. Again, did I see these happening in the opposite direction? Yes, of course, but that's what I'm saying. But I'm not rushing. I'm not trying to kind of tell you that for sure this is what's going to happen. No, because it could still break out lower if, you know, we just need some sort of like non-agreements between the sides in terms of tariffs, and then everything collapses. So for now, I would say just be very careful. If I'm looking for some higher levels, I'm going to wait for a breakout of the upper side of this potential falling channel. Then yes, potentially more buyers could join in, and we could travel to that all-time high. So at this point, like I said, we could still drift lower. What could also happen is, and this is what, you know, we saw before, let's say we clear the lower side of this falling channel and we drift lower, test the upside line, we get a sharp decline, and then by the end of the trading session we push back up, climb back up inside the falling channel, and this could be a nice little maybe like a you know, a pin bar or like a hammer moment here, where, you know, you can indicate a possible reversal. But again, that's just an idea. So that's why I am, like I said, and at that point on such a breakout, a lot of traders get taken out, and that's why people are saying, oh, I don't like to trade indices, because, you know, well, yeah, because these things happen, and, you know, you need to kind of position yourself carefully. So be very careful. It's with indices, it's a little bit difficult sometimes to capture. Let's say if you're trying to be long, it's difficult to capture the bottom, so it's easier to go for a breakout rather than, you know, trying to capture the bottom. And that's when I'm talking about the bullish case. The bearish case, the same story, just the vice versa. So long story short, for now, I'm cautiously bullish, but I need some more clarity on this one. The S&P 500, look, I talked about this last week. I said that I'm just going to observe this one. I have a little range here. It's roughly between the 6,200 and 6,284, 85 zone. So I need a clearance of one of the sides. That's it, period. I mean, I'm not really going to invent anything else here. We're currently ranging, so a clearance through one of the sides is needed in order to consider the next short-term directional move. And NASDAQ 100, similar story. As you can see yourselves, little range here waiting for that clearance. Let's jump into the US dollar index. So this one, okay. I kept on saying, and that I'm bearish on US dollar. Is this the moment when we should start looking at some higher levels? Well, for sure, it is in a very interesting resistance area. It's in the whole zone right here. So all these levels are, I think, are important. For now, what I'm going to say is that previously I said that 97.70. A break of that area could attract more buyers into the game. Although we're still below all the EMAs, but still we could see maybe a move towards that 50-day EMA. We're getting a little holdups here, so it's all okay. Still, the bears could in a way potentially enjoy their moment, but for that I would need to see a drop back. Let me just adjust this level here very quickly. What I would like to see here is a drop back below this little hurdle right here. This 97.14, 15 zone-ish. If we can get a nice drop below that, wonderful. I will go to the downside. I will go lower here, and then we'll take it from there. Yeah, this is where I'm going to aim for that 96 zone-ish. But if that gets clear, the forthcoming lower low will be confirmed. Let's jump into Europe. The German index DAX. So we saw a little bit of retracement on Thursday and Friday last week, and I think that it's all about the tensions between the US and EU on the tariffs. Look, I think that for now I'm not going to get very bearish or anything like that. I'm treating this as a nice little correction back down. Let me just double check. Oh, by the way, let's have a look at, this is the cash index that I'm looking at, but because the market is open already, let's have a look at the main index. We fell, okay. So we fell below this 24,120 zone. So this is where I said that I'm going to become a little bit on the bearish side. Well, you know what? I will do that actually. I will currently aim for maybe this territory right here, this 23,671-ish, because around here we could also test the 50-day EMA. So another thing that I'm looking at right now, and I'm really, really curious if this is going to happen, maybe, just maybe, a possible head and shoulders pattern looking good here, something like this maybe. Let me just... No, something basically among these lines. Right. Okay, look. Again, this is just a theory. This is just a thought, and I'm not saying that this is, this is what's going to happen, because again, much more confirmation needs to happen. But again, this looks interesting. Like I said, this is because this is a good target here. This 23,671 ish. Zone near the 50-day EMA, shown as the green line here on my daily chart. If we do travel towards that area, then yes, I will probably, and then we rebound from it, then yes, I will probably stick to this idea of a head and shoulders. At the moment, there still could happen a lot of changes. I mean, look, if somehow we get a nice report from the Eurozone that's saying that, oh my God, they agreed on some sort of like deals with the US, and then the same story from the US side. If we get a report that they agreed with Europe, then, and Mexico, then yeah, or sorry, Mexico probably out of the question right now for now, but with Europe, then yes, we could see DAX kind of reversing back down. In general, DAX is not doing bad for this year. I mean, DAX has been performing quite well. Look at this. Let me just jump into January. Where's that? January 2nd. There we go. So this is where we opened up. And let's say even with this little decline, we're still around 20%, doing 20% for the year. That's still better than some other indices. So I think that, like I said, DAX is an interesting one to watch. Like I said, if there is some positivity in the US-EU trade talks, then we could see DAX reversing back down. For now, I will, just because my technical picture says this, I will remain cautiously bearish on this one, but again, with just because it's DAX, just because we still don't know what EU will come up with, and we know that what the US came up with. But now let's see what the EU will come up with in this tariff telenovela. So if they're going to be quiet for some time, then maybe we could see DAX traders worried a little bit. So let's keep an eye on that one. And very quickly on the indices here, in the final index here, the FTSE 100, after clearing this key resistance area, I talked about this, it was the previous all-time high, 8,910 zone. We did push higher, we corrected back down, we tested this area, it provided good support. If we continue to trade above this, I'm still sticking to the upside. Let's jump into the Forex world very quickly, because I'll try not to spend too much time, because I think I already talked a lot about the economy in general, what's happening, and already briefly mentioned some of the currencies. But look, AUDUSD still okay. I talked about this. The technical picture here is, for me at least, straightforward. We're in a not a rising channel, it's a rising veg in a way, because we have a little bit of a squeeze happening there. But like for the past 2 weeks, I have been saying, look, while we remain inside the pattern, we could still drift to the upside. The only thing is, the only interesting bit for me is that, are we going to break the upper side here? Because normally rising wedges tend to break to the downside, because they're seen as bearish indications. However, in this case, we have the prevailing trend to the upside. So we go from that, and there is a good chance for this one to pop higher here, push a little bit more to the upside, maybe towards the 0.6687, maybe 0.67 territory. Good potential, like I said, target here, but I am only aiming for this zone because overall, look at this. We have a little nice downside line taken from the highest point of February of 2021, long-term downside line. So let's not ignore it. Again, so this whole move in general could be seen as part of a larger correction before another possible leg of selling. Let's keep an eye on this, of course. Let's keep an eye on this idea. But for now, yes, I'm still somewhat positive. But while we remain inside the rising wedge pattern, we could, still drift lower, test the lower side here, rebound, push back up. So if you're not really comfortable with this, then just kind of wait for a clearance through one of the sides here. AUDJPY, this one's showing that we are still, the risk on environment is still there. It's still here. And basically, yeah, our risk on, risk off monitor, AUDJPY, is showing us some positivity. So let's see, so far so good. I mean, I'm targeting this 97.32 territory. We're on the right track. We're not far. So hey, let's see if we can hit that. nvda, this one's a little bit on the bearish side, to be honest. But hey, a little bit of a retracement here happening. So let's see if we can clear the low of last week near the 0.5975 territory right here. If we can clear that, I'm going to go a little bit to the downside. NZDJPY, this is, I call it a little bit of a better indicator of risk on, risk off environment right now, nowadays. Yeah, it's a little bit more on the cautious side. So maybe actually I would say this one's a little bit of a better representation of a risk on, risk off, but still somewhat positive. USDJPY very quickly, pushing so far to the upside. That's great. Look, I talked about this last week. I said that if we do climb above the 100-day EMA shown here as the blue line, and we also clear the 146.28 zone, I'm leaning towards the upside. The 200-day EMA is my next target, and then slightly above that we have the 148.45 area marked by near the highs here of May, near the highest point of May. So I'm keeping an eye on this one. For the downside, actually I need to see a drop below the 50-day EMA wherever it's going to be. USDCAD, of course, we're watching this one very, very carefully, and I talked about this. I said on Tuesday, because we have all the Canadian and the US inflation numbers, keep your eyes on USDCAD. If you are trading something USDCAD related, keep your eyes on that, because again, we have ourselves an interesting spot here. Technically, look, we have approached this downside line taken from the highest point of February. So keep your eyes on down. If we clear the 50-day EMA here and we clear this downside line, boom, I'm aiming for the upside. Not too much to the upside, but only up until here somewhere, up until my EMAs here, which are not far from this 1.3860 zone. Let's keep an eye on that one. And also for the downside. Okay, look, I could, in a way, start looking at the downside from here. In a way, we can, if you're on the risky side, then you can do that. But I try to be a little bit more on the safe side, so I'll wait for a drop below the 1.3539 zone in order to consider slightly lower levels, because a forthcoming lower low then will be confirmed. USDCHF, it's basically DXY copy almost, so yeah, we're watching what's going to happen with DXY. I'm still cautiously bearish on this one, so that's why maybe I'm, I'm kind of still bearish on the US dollar index. Let's have a look at the EURUSD. Okay, so look, I talked about this, and I talked about this for a while now. We are in this rising channel pattern, and is this, let's say, the most correct way of drawing the rising channel? I would say, and yes and no. So it really is subjective. So I would say be careful, ladies and gentlemen. Just watch. Just kind of watch from your side, but the fact that we were in somewhat of a rising channel, yes, that is correct. So that's why I'm kind of being very careful here. Like, yes, we're seeing a little bit of a rebound here, but maybe we'll travel back inside the inside the formation. And oh, excuse me, ladies and gentlemen. Just a second. I need to clear up my throat. I think something got stuck in my throat. One moment. Apologies for this little technical issue from with my throat. Something got stuck, and yeah, had to clear it up. Apologies for that. Look, coming back to the euro situation, euro USD situation. Look, for now, I would say this way that do not exclude the upside scenario yet. Again, if I would say if we would drop below the 1.163031 zone here somewhere, I will then consider maybe a larger retracement back down here towards the 50-day EMA. EUROJPY very quickly. This one's still on fire. Honestly, this one continues to rally. I'm trying to find like some sort of a ceiling for now. I'm just letting it go, and honestly, I'm not examining the downside scenario. I need a good reversal before examining a possible, downside scenario on this one. GBPUSD very quickly. GBPUSD, yes, beautiful drop here. So far, so good. We tested the 50-day EMA. Let's see if we can do something like this right now. If we clear the upside line, ladies and gentlemen, I'm leaning towards the downside on this one. Let's jump into the gold, ladies and gentlemen. So the commodity world. Okay, the commodity world. Yeah, look. Gold, of course, picking up interest because we have this tariff uncertainty again, and certainly this 3,365 territory, which I was talking about last week. I said that if we do clear this, I'm leaning a little bit more towards the upside. If we do clear this and we stay, if we see the body of the daily candle remaining somewhere above the 3,365, I'm leaning a little bit more towards the upside. I'm leaning towards the 3,430, 40 zone. This is my key barrier, the one that I'm watching. And another thing, if you remember a few videos ago, I talked about this idea of a possible ascending triangle pattern, which, look, maybe it could be forming here. So this ascending triangle pattern, of course, according to all the TA rules, tends to break to the upside. That's why I have this arrow from here. So if you're not comfortable with this zone, then you can just wait for, to see if gold travels to this territory somewhere here. And if it does, then the question is, can we, confirm a possible ascending triangle? Well, let's wait and see. For now, like I said, let's deal with this barrier, this little baby here, the 3,365. We can stay above that. I'll go for some higher levels. Silver, amazing. Look, silver, I threw out this idea a while ago, and on TradingView. By the way, follow us on TradingView for more of these ideas. And look, where was that? Where was that? This one right here. There we go. That was on July 4th. On Friday, I threw out this idea. I said to everybody, look, keep your eyes on this because this is an interesting formation and looks quite positive. And boom, I am very happy. 37.30 got cleared. Amazing. We're traveling. Look, in general, I'm aiming for that psychological 40 zone. It's not the all-time high. Don't get me wrong, because let me just go into this new. It's not the all-time high, so let me just jump into this chart. It's still, we're the all-time high is somewhere around closer to the $50 mark. So yeah, we are traveling there and traveling towards that 40 zone. Let's see if we can reach that. I think that's possible to hit the 40 zone. So let's get let's buckle up and let's see if we can travel to that psychological 40 zone. That's what I'm going to aim for now, and then we'll take it from there. Let me just jump back into my charts here. Yeah, ladies and gentlemen, like I said, silver, that's the case. The downside scenario for silver for me is if we would actually somehow fall, below this upside line. This one is taken from the lowest point of April. So if we do somehow fall below that, I'm going to lean towards the downside. And in general, remember when we saw this market correction, sharp correction to the downside in beginning of April? Look at this from here. Say you're buying at 29 somewhere. We are doing almost 30%, 35%. Almost 35%. I mean, this is just spectacular. Palladium, talking about another element, another precious metal. I talked about Palladium, and I really kind of warned you about this. So yes, there we go. We're having a beautiful break here to the upside. 1,250 zone, we're clearing that. 1,300, 400. I think that these are the next potential targets. Let's keep an eye on down. Platinum is also rallying. Beautiful. This is working out very well. So yes, we broke above the 1,446. So let's see what's going to happen next. Copper, by the way, copper, I talked about this, and where's that little video? You can check out copper here on Markets.com trading view page. I threw out a piece here on copper, so you can have a look at that one. I'm not really bullish on this one yet, because again, it's I don't think that the tariff thing is going to happen. So it's really, it would be stupid. Anyway, WTI oil, somewhat of a bearish flag. Let's see, if this is going to be the case. Something like this basically is happening right now here. Look, I would say it's an interesting one, and let me just actually do it this way. It's an interesting one, and I would say this way, I'm still somewhat bearish on oil. I'm not really positive on oil, and I'm gonna get a little bit more excited with oil if we actually fall below all my EMAs. At the moment, we're above all the EMAs. Okay, that's fine. Maybe, just maybe, we could see that correction back to that $72 mark. But if once again these two trend lines provide good resistance, then another decline here could be possible. But again, like I said, I'm not rushing into things, because what I'm seeing here is I see a big pole, I see a big bearish flag forming. Again, let's not rush into things, but certainly the downside scenario is at a very interesting spot here, and it has place to be. So we'll keep an eye on these EMAs. Natural gas, very quickly. Natural gas pushing back above the 200-day EMA. Okay, I said to you last week that if we do stay below the 200-day EMA, I'm going to continue targeting the downside, but we're pushing back above it. So, however, my preferred upside scenario, yep, it is still from this area right here. A break above all the EMAs on my daily chart. Now that's when I'm going to start looking at some higher levels. Coffee, somewhat of a still hold up here, so I'm still bearish on coffee, but I would prefer to wait for a drop below this hurdle here, the 277 zone. Wheat, mixed as always. Sugar, now sugar is interesting. There we go, still somewhat positive. I talked about sugar last week as well. Also threw out an idea here on sugar, so there we go, you can check it out. It's a very quick one, and so far the idea is working out. Cotton, yep, not very interesting. And ladies and gentlemen, before we finish, as always, for dessert, the crypto world. Right. Okay, Bitcoin. I talked about this, I was aiming for this one, and there we go. You can check out my market, my take on the on the cryptos. I recently did that on the cryptos. So one was here on, where's that? One was here, I can't remember, or maybe it was even further down the line. That was Polkadot, that was already June. No, it was on YouTube, ladies and gentlemen. There we go. Because I do several videos here and there on YouTube and on TradingView. So let me show you what I'm talking about, so you can check out the video, which was this one here, the crypto update. BTC says test the highs. So this was 3 days ago, ladies and gentlemen. I did this video 3 days ago, and boom, it was a fantastic one, I think, because I said that we were testing here, this area, and there we go. We cleared that area. I said my next target is going to be the 122 zone, because that is a nice 78.6 here on the Fibonacci extension. If you measure it from the lowest point of August of 2024 to the highest point of January of 2025, and then the lowest point of April of 2025. There we go. Boom. Look at how far we have traveled, ladies and gentlemen. From the April drop here, when we were around, like, let's say, rounding it up, 80,000. There we go. Look at this. I mean, this rallied significantly. And you know what I'm going to do? I'm going to take a pause. If somebody's saying to me like, oh, are you not going to aim for higher levels? At this point, no, because I want to redo this a little bit, because look, I want to see what's gonna. Let's actually have a quick look. Let me just because I have this idea right now I will continue using my Fibonacci extension because the Fibonacci extensions are very good for whenever we hit all-time highs. So this is what I'm going to do right now. I'm going to see if this is going to make sense. So 127. Okay, that would be like the next, big number for me here. This 127, 128 zone ish, somewhere around there. That's what I would aim for. But at the moment, I don't really want to go way too far from that 122 territory, because let's see what's going to happen. Maybe we'll settle down a little bit today. If the momentum is still strong, then hey, ladies and gentlemen, like I said, let's aim for that 127, 128,000 zone. We'll see how it plays out. Because Bitcoin Cash, for example, look at this. Bitcoin Cash dropped on Saturday, the 12th of July, whereas Bitcoin on the 12th of July just retraced a little bit and then pushed higher. But Bitcoin Cash really dropped heavily here, and it fell back below my 526.60 zone here, and it's really looking a little bit bearish, to be honest. So that's why I'm not really in a rush. We have this positivity right now surrounding cryptos because we see these, some institutions, big institutions, are jumping into the crypto world. You see big companies buying cryptos because cryptos are becoming a little bit more interesting from the regulation side, because you have your ETFs, you have your Bitcoin and Ethereum ETFs where a lot of big money is going into. However, let me say that the whole point of cryptos was the fact that it was decentralized. Now you were centralizing that, and my question is actually, is that not going to be a negative thing? People are not going to start abandoning cryptos just because because those are becoming, like I said, a little bit more centralized, because it's kind of losing the whole essence of a crypto, right? And it should have been deregulated. Now it's like regulated. So that's like, and there's a big bill coming through in the US this week. So there's going to be, like I said, a lot of choppiness, I think, in that front. So if you are trading cryptos, just be careful. If you're investing, then okay, you can stay long if you wish, but just be careful, because like I said, if there's going to be a bill which is not going to be, let's say, approved, then maybe we could see maybe a reversal. Actually, you know what I'm thinking right now while I'm saying this, that even if it gets approved, like I said, it's killing the essence of the whole thing being decentralized, being unregulated. So now it's going to be regulated. So will it continue having the same interest? And it's a very interesting moment right now. Like I said, I wouldn't be surprised if, let's say, the bill gets accepted, those in the US, and then we see a drop in cryptos. Just because, like I said, it's like buy the rumor, sell the news moment. So just let's not rush into things. I mean, okay, look, if you want to speculate, feel free. Maybe this will actually go further north. Ethereum crossed the 3,000 zone. Hey, it could travel easily towards that 3,282 and stuff like that. So far, I talked about this breakout here. I warned everybody, said, look, this is what I'm watching here. If we clear this, I'm going to go higher. Boom, Ripple. The Ripple is the best one, I think, because I talked about this as well. I said that, but you know what? I was aiming for the 2.65 only-ish. But okay, look, I'll take this. I mean, this is good as well. We are in a very interesting resistance area right now, 2.9660. Of course, the psychological 3 level is that everybody's watching. We are actually near all-time high. Look at this for Ripple, 3.39. The question is, can we go here? The answer is yes, we can, but will we? I don't want to rush into things yet. Like I said, I'm going to keep an eye on this, but certainly if we do push and stay above the psychological 3 zone, yes, I'm going to go for that all-time high on Ripple. Litecoin, very quickly, still pushing nicely to the upside. So far, so good. I talked about this breakout above the EMAs. Okay, there we go. We're clearing that nicely. Dogecoin is at an interesting spot here as well. We cleared all the EMAs where, after we cleared, we got, we exited this little squeeze here I talked about. So we cleared the upper side of this little triangle, and we cleared the EMAs. So I would say yes, there is positivity, but again, if it seems like they're not picking up enough, like it seems that they're lagging a little bit. The Doge coins and other cryptos seem like everybody's in Bitcoin, but if Bitcoin suddenly loses a little bit momentum, then I don't think that this is going to fly high. Polkadot is above the 4, that's fine, the $4 mark, so we remain above the 100-day EMA. So I'm leaning a little bit more towards the upside on Polkadot, but again, it's a very speculative instrument here. I mean, they're all speculative, but this one is particular. And finally, Tron. There we go. Tron reached some of my levels. The psychological 0.30. It reached it, so I cannot really say anything else apart from very good. Very good. And are we going to go further north? Look, at this point, I would say if you've missed the rally, okay, you can. If you want to jump in, you can. The only thing is, remember that it can really quickly reverse against you. So either you have a very tight stop loss, if you miss the rally and you still want to join the action, but then you have to be very careful. Then you have to, like I said, you constantly monitor it and kind of raise your stop loss in case into break even or something like that, just to kind of protect yourself in case it reverses sharply, because the upside momentum happened. And like I said, my issue is Bitcoin Cash. I like to look at this one a lot, and this one is struggling a little bit, I would say. Whereas Bitcoin is rallying, and hey, let's see what's going to happen with this one here. But with coming back to Tron, I'm like I said, I'm really, it made the move which I needed already, so I'm just going to leave it. Even if it's going to go further north, like I said, it already made my move. I'm happy, so let's see what's going to happen next. So that's why I'm going to leave this one. I rather stick to the other ones, the more popular ones. But yeah, I do like Tron as well. Ladies and gentlemen, I ran this a little bit over my time, but hey, I hope you found it useful. It was a big... there was a lot to talk about, and there was a lot of things to consider, and I think this week is going to be quite an interesting one. From you understood from my comments. So hopefully you enjoyed the session. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments. Well, you don't have comments, but in general, I always encourage to have comments. So thank you. If you still, like I said, if you want to ask some questions, look, if it's not during the live session, you can always do that during the when the video is uploaded, already edited. You can do the comments in there in the comment section, and I'll pick up on those comments during the next session. The next session will be on Wednesday, the usual 6 o'clock GMT time. So hey, I hope to see you there, and I hope you found this useful. So ladies and gentlemen, as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you on Wednesday. Bye-bye.